So you've probably heard of selling put options, but what are the margin requirements? Many traders are getting it wrong, and that's how they get in trouble. So in this video, I'm going to break it all down for you so that you can understand how it works. By the end of the video, you'll know exactly what is required in order to sell a put option and how option selling on margin works. Specifically, we'll talk about what margin requirements are and why they are so important. We'll talk about how margin requirements work when selling put options, and then I'll give you my conclusion. So let's get started and talk about what are margin requirements and why are they so important. Well, you see, margin is the amount of money that a trader must have in their account to enter into a trade. And you probably already know this from trading stocks. When you open a margin account, you have twice as much buying power as you put in your account. Let me give you a very specific example. This is one of my accounts. I haven't traded in this the whole year, but there's still around $68,000, a little bit more in cash there. Now, since this is a margin account, as you can see, my buying power for stocks is twice as much. So this is here 136,659. But what about the option buying power? Well, at first glance, it seems that I don't have any leverage when buying options, since the option buying power is exactly the same as the cash that I have in this account. But that is not true. Let's take a look at an example. So I want to show you right now exactly how margin requirements work when selling put options. So as you might know, I love trading the wheel strategy. And as part of the wheel strategy, I'm selling put options. So let's take a look at an example of how margin works when selling these put options. So here's an example trade for Google. As you can see, Google showed up in the scanner with a recommended strike price of $103.50. So when selling this put, we collect $1.28 per contract traded. And since options trade in 100 packs, this is where we would get $128 per contract. So as you can see, I set my account size to $65,000, and we see if we move this over into the calculator that PowerX Optimizer recommends that we are trading 6 options. So that would give us $768 in premium. Now, usually I like to trade up to 5 positions in my account, but for this example, I set the number of positions to 1. So the expiration for this option is September 16th. So if Google is trading below $103.50 on expiration day, which is 11 days from now, I would have to buy 100 shares at $103.50 for each option that I sold. So let's go to our handy dandy notebook. So if I have to buy 100 shares of Google for $103.50, so this means it is $10,350 that I need to have in my account. Now, since I'm selling 6 options, I need to have 6 times 10,350, and that is $62,100 in my account so that I can fulfill my obligations. Now, obviously, I have enough money in the account to do this. But here's the tricky part, and that's where traders get in trouble. Let's actually put this trade on and see how much margin the broker requires for this trade. All right, so we want to go to September 16, sell the 103.50. So we're doing this right here, and we're changing this to 6 contracts. So as you can see, the broker only requires $10,380.80. Now, let's take this number and divide it by the 60,100. So we have 10,380 divided by 6,200. And you will see this is only 16.7%. Now, before I explain to you why that is and how this can get you in trouble, let's check another broker. This time I will place the trade with Tradier, and it's super easy because Tradier is integrated with PowerX Optimizer. So instead of entering all this data, I just push one button that says place order. So here we go, everything is filled out, and if I go on preview, we see that this broker is requiring $13,567.50. So again, this is a little bit more. And if you divide the 13,567 by 62,100, that is actually required if you get assigned, you will see that this is only 22%. So why is the broker only requiring a fraction of the cost to put this trade on? Very easy. Number one, most of the options that are being sold are either expiring worthless, or number two, they're being bought back before expiration, and therefore the trade is closed. I personally want to get assigned, but if you take a look at my stats, this is my trading log here, I'm only getting assigned 35% of the time, as you can see here. So here is why this is super dangerous. If you have $65,000 in your account and your broker only requires $10,000 to $13,000 to put on this trade, you will have more than $52,000 left in option buying power. And you might think that you are safe and you can put on more trades, but that is not the case. If you do this and then you get assigned in more than one position, you won't have enough money to buy the stocks that you have to buy, and your broker will issue a margin call. And trust me, you want to avoid that. And that's why PowerX Optimizer suggests a position size based on your account and the amount of positions that you want to have in your portfolio. Let's say that you want to enter up to 3 trades. So we're changing this here to 3 positions and click on set. And now you see that you could only trade 2 put options of Google. Now, as you can see, we see the margin requirements here. You only need $20,700 in your account in case you're getting assigned. Is this making sense at all? So as you can see, margin requirement when selling put options is much lower than the actual cost to put on the trade. And this margin requirement can be a dangerous thing because it can lead traders to overtrade and get themselves into trouble. You see, when selling a put option, make sure that you're aware of the margin requirements and stay within your risk parameters to avoid any margin call. By the way, I made a video on how to avoid margin calls, and I will link to it right here. Take a look at this video, should be right there, because it shows you 3 ways to avoid a margin call, and every trader needs to know this. So check it out, and I'll see you over there.